And welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we come fresh out of the weekend, and we'll do our Macro Monday as usual, talking about macroeconomic indicators that we expect throughout the week and other macro trends that impact the shipping industry. Let me briefly share my screen to give you a little bit of guidance here. 4 core bullets for us this week on this Macro Monday. We have in Germany, we have the business climate and consumer confidence data coming in today as well as tomorrow. And we have tomorrow and Wednesday, US home prices and durable goods orders data coming in. All of these, of course, have a significant impact on a global growth outlook and global trade outlook. So that's definitely must-watch indicators. On Friday, then, the big end-of-week whammy, so to speak, we have first the Bank of Japan announcing their latest interest rate decision very, very early in the morning for us here in Europe. And then we have quarter-on-quarter GDP updates in key European economies. So that's Germany, it's France, it's the overall European economic area, right? So end of week, a couple of indicators to watch. Then our third bullet here, we have new data come in from the US. This is mostly in and outbound container volumes. There's a very interesting report that I can recommend by John McCown that looks at this on a month-by-month basis based on CTS data. And what we saw there is that March inbound volume contracted 32% year over year. We had an update already last month on February data, which showed a significant contraction that deepened even over in this March, which is even more significant because Chinese New Year was relatively early this year. So this is not really tainted by Chinese New Year. If you compare these inbound volumes to 4 years ago to 2019, you still have a negative growth here, a 0.4% compound annual growth rate versus 2019, and that contrasts starkly with the long-term CAGR of, I think, 3.2% since 2010. So since 2019, world trade or trade into the US really has seen a hit. On the export side, export volumes are actually positive, which turns around now the sort of container imbalance in the US. There's still higher inbound volumes than outbound volumes, but the gap is narrowing, which is actually a good sign for container shipping overall into the US. And the third core insight here out of that report, out of that data, that March data, is that East Coast continues to gain market share. East Coast and Gulf ports now have a higher inbound market share than the big West Coast ports, which is significant, and it's a longer term trend that just continues to be pushed and exacerbated by, for example, the labor disputes on the West Coast, right? So shippers just see more reliability on the East Coast. The East Coast now has the distribution infrastructure as well to handle that volume. So volumes just keep on moving to the East Coast, and we also don't expect significant return to the West Coast anytime soon. And then the fourth bullet point here, very, very interesting report by ING Bank, by the economist over at the ING Bank, looking at world trade and highlighting that world trade has been contracting since September last year, around about 5%. The world trade has been depreciating, but overall there's no signs of deglobalization, and full year 2023 growth is expected to be positive, around about 1% growth expected year over year in 2023 as a whole. And yeah, as I said, no signs of deglobalization overall. It's just that trade patterns and trade routes are shifting. So globalization is not ending; it's just changing, right? So again, here very interesting and important messages for container traders and freight forwarders worldwide, because you have to look at your business network, you have to look at your trade pattern, you have to look at where do you earn money and how is that changing with the changing trade patterns. Cool, that's it for us from our Macro Monday. Stay tuned for those economic indicators that are coming today and later in the week, particularly on Friday. I'll see you again on Wednesday. I'm still looking for a good name there. Wild Wednesday it is for the moment. And until then, have a fantastic start into the week. Happy trading, and talk to you soon. Take care.